Russia is probably the 23rd or 24th biggest exporter to the U.S. And yes, a lot of that is uranium. A third of it is, though, going the other way, very low-tech stuff, ammonia, urea, basically fertilizer, right? And the U.S., if it were to play nice with Canada, could just as easily get it from across the border. Similar stuff and roughly the same price.
Yeah. I mean, that's generally the case, is that commodities are fungible. And this is why if you take China versus the US, if China wants to import agricultural products, the US wants to put tariffs on US imports of agricultural products, it can buy agricultural products from somewhere else. The problem is that a lot of the stuff that the US buys from China, it can't buy anywhere else. I'm normally based in Canada, as you know. I'm in California at the moment. It never ceases to amaze me if you go into a Target just how cheap things are here still. And it's because they're all coming in from China. Well, if you really put 30, 40, 50% tariffs on that, which is what we're looking for, let's remember that, those prices are going to go up. And where else are you going to buy them from? Well, maybe some will be from Vietnam, which is just China trying to get around the tariff rules. It's really going to put up the price of basic products for the US consumer.
So, talk to me about how you're thinking about these secondary sanctions, right, on the rest of the world, or rather on countries that aid and abet Russia. They've closed the door in terms of financial transactions. We saw that already. They've been very reluctant, though, to go the whole hog and cut off access to, or rather their access to Russian oil. I mean, what is this going to have the intended effect? And I ask because, on a related note, with China, right, we had the export numbers out, I think it was yesterday, very strong. And despite everything that's going on, the tariffs, et cetera, China is still finding a way around, a workaround to sell their goods. Maybe not as much or so much to the U.S., but as we saw in Trump 1, there are alternatives.
Yeah. So you're absolutely right to identify China as being the crux of this, because who buys Russian oil at the moment? It's China and to a degree India. So those secondary sanctions on people who are importing from Russia basically aimed at China. So if we're talking about, as Congress is, was it 500% tariffs on that? China's going to retaliate. Now, as you say, China is doing okay. Its exports to the US are down. The numbers we had yesterday, they're down 16% year on year. And that's probably held up a little bit because importers in the US are thinking the tariffs might be bigger in a month or two. Let's buy now. What China has done, though, is started to flood markets in the rest of the world, particularly Europe. And the currency is helping there. The euro has strengthened very significantly against the renminbi. So the bottom line here is China is exporting deflation, which it was exporting to the US. It's now exporting it to Europe. And that's going to be a huge hit to manufacturing in Europe because unlike the US, many European companies are direct competitors with the Chinese, whether it be automakers, machinery tool makers, robotics makers. They're competing with China, and they've got this currency really moving against them. So that's very bad news for the European economy as well.